Hello and welcome to the Decrypting Crypto podcast. It's May 8th, 2025, and this is Off-Chain, your weekly recap of the biggest stories in the crypto space. I'm Matthew Howells-Barby, and as always, I'm here with Austin Knight. How is your day going, Austin?
It's going all right, Matt. Markets are looking okay today, at least. Bitcoin's looking all right. How are you feeling?
I did screenshot the Bitcoin chart, so I'm sorry if I cause a collapse. But I was awoken to a beautiful, beautiful green candle, and I had to almost blink twice to double check that my price alerts were coming through correctly, and what I was seeing was reality, which is probably more reflective of the state of things at the moment. But, you know, we've been talking a lot recently about macro, which has dominated pretty much everything. And I think today is a great example of where something seemingly quite small is driving something quite large. And what we'll talk a little bit about today is Bitcoin and crypto overall really going on a relative tear. So as we speak right now, Bitcoin hasn't pushed past 100K. I'm unsure if it's going to push past 100K today, but we're at the precipice, right? It's like $99,444. We've came very, very close. And this is great. And more importantly, unlike the more recent kind of quick pumps that we've had, the move up from 85 up to 92, I think, that happened a couple of weeks back, it actually hasn't just been Bitcoin leading the charge here. So Bitcoin's been moving up, but ETH is on the cusp of 2K. Some of the different larger market cap meme coins have moved very significantly. I think I saw, was it MOG, which is one of the larger cap memes, was up 40% in the past 24 hours. I bring up things like that because it's not like, you know, pump fund memes. These are memes that have pretty significant liquidity, trading volume, and market caps. So the tail end of the more speculative end of crypto is driving up, and there's been around $100 billion worth in total crypto market cap has been added in the past 24 hours. So it takes us up to about 3.2 trillion in total crypto market cap. This is great. We should be rejoicing. And, you know, why is this happening? Why today? What's happened? We're going to talk about yesterday's Fed rate decision. It certainly didn't come off the back of that. But what we had overnight is the global superpower of the UK. Well, at least Trump pushed out a truth yesterday night, maybe early hours of the morning for the US, that was alluding to a big trade deal coming with the UK. Now, I don't think any of us are expecting a big trade deal. Is it even that significant to the US economy? No, but what is this? Why is this important? Well, it's one of the first signs with a major economy of negotiations and trade deals actually starting to happen off the back of the tariffs. And honestly, I'm pretty surprised that the market has moved so much on this, because to be completely frank, this is a layup, right? Like, of course, the UK are going to do a trade deal way before tariffs. For those that haven't been following either our podcast or the UK economy, the UK has been trying to do a trade deal with the US pretty much every single day of the year since Brexit happened. This has been like, you know, the holy grail for the UK, and this was what was pushed as a big narrative, like post-Brexit, which has been many years now, that, we would be focused on bringing together important trade deals with all of the biggest economies around the world. Now, of course, that never materialized. But it turns out maybe this will have a one silver lining of Trump's crazy tariffs on the UK, is that there will be a trade deal struck for all of the Brexiteers to rejoice in and begin their "I told you so" parties about a decade late. So
you sound bitter, Matt.
Do I? So I think we've got this, and I think this is a sign of things to come. Now, there's optimism around this. And more importantly, so we're going to have China discussions potentially happening over this weekend. Who knows? But that's apparently what's going to happen. I have a feeling that's going to probably spoil the party, because unlike the UK, China don't have the same reek of desperation that we do in our negotiations. In fact, quite the opposite. If there were even the most minute of progress made in that session, I think the market will go crazy. I mean, if the market's moving this much, and just to be clear, this isn't just crypto. S&P futures were up. At one point this morning, UK time, I was looking at the S&P futures, and they were up 1.5%, which is a big move in a major index like that. Now we're post market open, about an hour into play. We're 60 basis points up. We've got the NASDAQ is up 0.81% as well. So big moves in the equities market in the UK. Hilariously, the FTSE is down 0.29%. Probably very reflective of the state of optimism on each side of the Atlantic here. But so I think this in itself is really important. Also, we did have China kind of somewhat stealth begin their quantitative easing, that maybe they're not calling quantitative easing, happen a couple of days ago as well. And this is really starting to set the scene. But
I think they're feeling some
positive.
Yeah, it's positive for the negotiations. I think China is starting to feel some real economic pain, and this isn't just based off of the narrative that Trump is spinning. I was reading a couple days ago that they just quietly stopped reporting unemployment data for younger demographics in the country, which was already, the unemployment was already pretty high. It's just that they have certain certain gates in the way that they track unemployment, that if you pass them, they believe the CCP believes it starts to become kind of unsustainable. And the speculation is that they're starting to pass some of those because they just conveniently stop reporting the data, which of course, all data coming out of the CCP is, you have to take it with a grain of salt anyway. But once it stops getting reported, I think that indicates that they're worried about showing some type of a vulnerability that could be used in negotiations. With that said, and I think we've mentioned this previously on the podcast, I think that the challenge that the U.S. is up against in this, even if we have the economic upper hand, is, and that's an assumption, by the way, is the political circumstances that Trump plays in are very different than the circumstances that Xi plays in. The CCP can play a very long game because they have a dictator for life at this point. And, they're not totally averse to starving 100 million of their people in service of a political plan, which obviously is something that wouldn't even get close to flying in the West. And so it'll be interesting to see how this plays out. We mentioned in previous episodes, trade deals on average take on the order of years, if not decades, to materialize. Some of the shortest trade deals in history took From number 1 to number 3, it was 6 months to 2 years, and then everything beyond that was it took much longer time. So,
Well,
yeah,
we're talking about the post-Brexit UK trade deal here. There was Brexit was
yeah,
quite a long time ago, and and I think they've even a lot of the language that's being used here initially came out as a trade deal. As I can't remember the exact verbiage that they changed this to now, but it was like an economic agreement. Now that they were talking, so they don't actually call it a trade deal. But I agree, and you reminding everyone of the context of China before any of this tariff stuff. China has had a really, really challenging half decade. We had the Evergrande crisis, which was absolutely monumental. We talk about the unemployment rate in the younger demographic in China. This was an enormously damaging situation in the entire property market largely collapsing in China, affecting those individuals disproportionately. They were probably, of all the major economies, the ones that suffered the most with COVID, I would say. And I think that was because general consensus at this stage, with the benefit of hindsight, is that Xi was extremely conservative in the lockdown measures that he put in place, and they remained in lockdown for such a huge amount longer without actually dealing with things in any kind of way. So, coming out of this, they don't have that kind of leverage. Now, if we come back to the US though, last week, things
yeah,
haven't been looking that rosy on US shores either. We saw the US GDP numbers come in at an annualized rate of contraction by 0.3%, estimated to be at 0.2%. And this is in the first quarter of 2025. Now, a key driver of this was around imports. Imports increased by 41.3%, particularly in the consumer goods like pharmaceuticals, capital goods, things like computers, right? And what we believe here is that the front loading of imports ahead of tariff enforcements has significantly impacted net exports, and that's a big part of the GDP contraction. There's a strong argument to say that's transitory. That's not a structural change that's going to last. In the same sense that where we've seen in many other exporter nations, manufacturing being like a very, very strong sector in Q1 because everyone's been ramping up their manufacturing ahead of tariffs. So there's a lot of skewed data in Q1. What I think has been more concerning is it doesn't feel like Q2 is going to be a particularly good read for many countries, the US included. But the piece that came alongside this was inflation, and showing at least like PCE increased by 3.6%, which was up from 2.4% in the previous quarter. So the big concern in all of this is the US going to enter into a period of stagflation? And for anyone listening that isn't that familiar, that's where your GDP is contracting whilst your inflation is rapidly increasing for successive quarters. And that is extremely damaging. And it puts the Fed's dual mandate of, helping support and stimulating economic growth whilst maintaining a handle on inflation in a very, very precarious position, because it's very difficult to get out of stagflation, as many other countries outside of the US faced in and around the 2022-2023 period as well. With that, why don't we dig into the Fed interest rate decision at the FOMC meeting yesterday, because I think that's another important, variable to be thinking about when you're thinking about how are you going to position yourself in crypto and the markets are wide.
Yep. So we just had the Fed meeting. They decided to hold rates at 4.25% to 4.5%. And they cited basically exactly what you were just talking about, Matt, concerns over stagflation. If you read between the lines, the mixed economic signals that they talked about were weak GDP growth, sticky inflation, and financial market fragility. This is their second consecutive pause. And that's despite the fact that they're getting pressure from both political parties now to cut rates effectively. Trump from the right is pushing for cuts, and progressives from the left are pushing for looser fiscal policy. And now markets are starting to speculate whether the Fed is done hiking or if they're just waiting for more data, if they're kind of in a wait and see mode still.
Yeah.
And so what does that mean for Bitcoin? Well, I think that what it means for us is that Bitcoin's safe haven status is currently evolving. Bitcoin was originally pitched as an inflation hedge, but increasingly it's starting to behave like a liquidity hedge. What do I mean by this? An inflation hedge would be an asset that protects purchasing power during rising prices. So this would be something like, putting your money into gold or putting your money into real estate so that as the value of those assets inflate, you protect your investment. A liquidity hedge would be an asset that performs well when central banks inject money supply into the system and risk appetite increases. So this would be a lot of like what we saw Bitcoin do, and equities for that matter, in 2020 through 2022. This would be, investing in tech stocks and in crypto, I think is starting to become part of the consensus. Bitcoin's behavior has shown that it tends to rise when liquidity is abundant, not just when prices rise, but when money is cheap and flowing. And so I think that the implication of this is that crypto market cycles may be more tied to monetary policy than to inflation itself. So you're a little bit at the whim of the Fed here. What's the impact of stagflation fears on this? Well, it may be a benefit to crypto longer term because stagflation, again, being this combination of low GDP growth and high inflation, leaves very few good options for traditional investors. And in this uncertain type of environment, Bitcoin's appeal as an alternative financial system could actually strengthen, especially if we start to see trust in central banks like the Fed decline, which I think is happening. It seems like they're kind of running out of levers that they can pull to control this difficult scenario, and thus trust is waning. So that's an interesting lens to view Bitcoin through over the course of the long term.
And I think that the recent spikes that we're seeing support some of that. We've talked a little bit about this before in recent weeks, and I think I made the comment a couple of weeks back that it's felt like a lot of the price action when it's happened has been like a coiled spring. It's been somewhat short-lived at times, but it's been extremely aggressive moves upward versus a slow, steady kind of grind up. And we're seeing that again today. What you see in all of this is when there's any signs of more liquidity coming into the market. China, with some of their monetary easing and fiscal easing, we're seeing trade deals which are seeing as like the proxy to some of that easing as well. The hopefulness that the Fed will begin a rate cutting cycle once we get more clarity, again driving more liquidity into the markets. All of this is just like you see investors making big moves. Just they want to have a reason to invest back in to the US equity markets in particular, and crypto is kind of one and the same with some of that, albeit we've seen these pockets of decoupling. And this is kind of like a lot of these moves are fast money, the fast money moves, where it be retail or the slower moving, the big kind of sticky money, right? Big pension funds, big mutual funds, etc. They're much slower moving, and from what we've been seeing so far, in amongst all of the turmoil around tariffs, there's not been an enormous amount of movement in reallocation yet. And you have to think that they are going to have been positioned at the start of this year to be very heavy in US equities, albeit that kind of institutional buyer is going to have less exposure to crypto, but will grow over time. So I think like where we're seeing these like crazy spikes and moves is just people rotating around and wanting a reason to invest in some of this. And I think this will continue. It would not surprise me that we have another couple of months like this of just a small piece of good news, and we take a rapid upward trend, and then we trend sideways for a little while, and then we have another rapid movement up. If you're looking for kind of slow, steady, incremental growth over the next few weeks, I mean, you're not getting that from the S&P, let alone crypto. So I think that this is the state of things right now. I think you just gotta. I think it's not a terrible place to be allocated at this moment in time, and just ride the wave.
Yeah. All right. Speaking of getting into crypto, New Hampshire, the state, has established a cryptocurrency reserve. They're the first state to do this. They passed a law allowing up to 5% of their public treasury to be allocated in crypto, including Bitcoin. And since they're the first state
awesome.
to, I mean, it's unbelievable. It's fantastic to see. So since they're the first state to take this step, this is a pretty major symbolic milestone for crypto legitimacy in government finance. But I think that like that, you may look at that 5% allocation and say, 5% allocation of New Hampshire, like relatively smaller state budget. What's the real impact of that money on this ecosystem? It's not the literal 5%. It's more so the precedent and the implications that it has. 5% of New Hampshire's reserves, that's not going to be a game changer in any way financially for Bitcoin. But it does create a legal framework for other crypto-friendly states like Texas, huge economy, Florida, Wyoming could potentially follow. And this also sets the stage to reshape some state-federal financial dynamics. If states start hedging with Bitcoin, this actually is a little bit of a subtle form of monetary independence on the state level. And if that trend grows, it could challenge the federal government's monopoly on currency and reserve strategy. So earlier we were talking about, hey, what's happening if the Fed is in this wait and see mode, if they're keeping rates steady, if they're steering down stagflation, and if trust in them starts to wane. Well, states could start to diversify and de-risk away from Fed decisions through cryptocurrency reserves. So it's wild to see that come out of New Hampshire, live free or die state.
And I think it's what I completely agree with your take here. This is much more symbolic than an enormous price action driver. But it is very important, and we've been talking a lot this year so far about macro, both on the monetary and fiscal policy side, because it has been dominating everything that's been happening so far this year. And we also cover it a fair bit on the podcast anyway. But in the background, since the start of this year, there has been so many moments like this that have been very, very positive structurally for the state of the crypto space and its regulatory environment, integration into the financial systems globally, right? Not just the US. And I think this is another small step towards this just becoming a commonplace kind of strategic move at the state level. I was somewhat skeptical. We talked about this, I think you were too, at the start of this year, around, the strategic Bitcoin reserve coming to fruition in the way that it was being positioned. And I think this is how it happens. It's slow, steady, state by state, over a 2 to 3 years, you start to all of a sudden see this come into place. And then by the end of the kind of decade, you start to see something meaningful structurally that is in place, not just at the state or federal level of the US, but all other countries and major economies following suit.
Yeah.
Which is very positive.
Yeah, and it makes sense. Once you start to see a crypto-friendly regulatory environment at the federal level, that makes your state level decision a little bit easier. So
yeah,
that'll
I want to know which state is going to be the first to build a strategic Fartcoin reserve. I think that's the question that everyone really wants to know.
Yeah. All right.
We'll see.
I've got one quick end cap of a story. I would be remiss without revisiting some of the glory days of the 2022 collapses. And
there's not more SBF, is there?
I hate to disappoint you, Matt. Unfortunately, SBF he's too busy doing his media interviews from solitary confinement.
It's true. Podcast coming soon, I imagine. Yeah.
Yeah, exactly. But we've got one of the next best things. So prosecutors are seeking a 20-year sentence for the founder of Celsius. Remember the Celsius collapse? Well, Celsius was a crypto lending platform that allowed users to deposit digital assets and earn high interest yields, while they took those funds and loaned them out or invested them in high risk strategies to generate the returns that they were promising. And those high yields were considerable. They were up to 18%. They fluctuated.
Rookie numbers for the last bull run. Come on, you got to juice those babies up.
What's interesting about these is that they are funded by some pretty risky and opaque investment strategies. And even at the time, there were some grumblings and some concerns about that. They locked user funds into some illiquid DeFi positions while still allowing instant withdrawals. And so, how does that work? Well, it turned out that they had massive exposure to Terra, Luna, Three Arrows Capital, Voyager, all of which collapsed.
Great investments.
Yeah. And they suffered huge losses from that. Well, at the same time, they had this CEL token that it turned out they had artificially inflated while insiders secretly sold large amounts of it off. And then
I do not believe it, Austin.
I know.
I do not believe it.
Well, it all came to a head in June 2022 when they paused withdrawals, that telltale sign that we saw over and over and over again at the time. Yeah. And then just a month later in July, they filed for bankruptcy. And what did they reveal? A big old hole, a $1.2 billion hole on their balance sheet.
Another rookie number. Rookie number. Come on. Playing number 2 here to FTX. We can do better than that. Come on. Win it all back. One big trade. That's all they needed. They needed Fartcoin back then.
Yeah, they truly did. How about this, Matt? I do have a slightly bigger number for you, and that's $20 billion. That's $20 billion in customer deposits that they had held just by 2021. There's still ongoing discovery around this. When they filed for bankruptcy, they left customers unable to access approximately $4.7 billion in crypto assets. So what is the follow-up from this? I know, right? Well, Alex Mashinsky, who was the founder and CEO of Celsius, he is the person that the US DOJ is seeking a 20-year prison sentence for today. That should be coming down any moment now in a Manhattan federal court. And it's not looking too good for him. In December of 2024, he pled guilty to 2 counts of fraud, one for commodities fraud and another for securities fraud. And this included admitting to misleading customers and manipulating the price of their token, CEL, for personal gain. In fact, he profited approximately $48 million through inflating that token while secretly selling his holdings, all while, at the time telling customers that the platform's safety and profitability was great.
I mean, he's got to pay for the boat, Listen, he needs a place to think.
Yeah, wasn't Suzu's mega yacht that the one that he was running from Interpol on, wasn't that like a $50 million yacht? These are rookie numbers.
Listen, Mashinsky is doing it all wrong. You needed a super yacht, like Bond villain-esque hideout. I'm just disappointed. I don't know if we can even call Mashinsky a number 2 on this to SBF at this stage. But
and
as far as things pleading guilty to, it's not good, is it? Commodities and securities fraud.
It's not good ones. And gosh, his defense, I don't know. It's not looking great. His legal team is requesting a sentence of no more than a year and a day. So they've officially taken the Pawn Stars approach to this. You ask for 20 years, best I can do is a year and a day.
A year and a day. But it's a bold strategy.
How about this, Matt? They're arguing that the company's collapse was due to a broader crypto market downturn and not intentional fraud. But that's tough to reconcile with the fact that he already pled guilty to commodities fraud and securities fraud. The other argument that they're making is that he served as an Israeli fighter pilot and he's a father to 6 children. So he has responsibilities.
Well, now you say it. Now I know why he needed the $48 billion. That's just the kids' school fees. Can we really blame this man?
Matt,
turns out you can be a fighter pilot and have 6 kids, and actually you can just go around butchering people, and people will be okay with it. I think, according to this, it's a good defense. I'm not sure how well that's going to fly.
Oh my gosh, Matt, you're so spicy today with your political resentment.
Brexit got me all fired up, Austin. We can't reopen that wound.
All right. So with that, let's keep an eye out for that sentencing. I'm sure it's going to come down any moment now. Maybe we can do a quick update next week. But I see green on my equities and crypto ticker. I'm happy today. I see a good sentencing coming down. That's the cherry on top. Talk to you next week, Matt.
Oh, yeah. Mashinsky's going to get 6 months with good behavior, and BTC is going to rip down to 70K the moment we press publish. What a time to be alive. All right, man. See you next week.
Yep. See you.